Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Rivian shares soar 40% after Volkswagen takes $1 billion stake. Yes, it's just in time to take profits. In this video, I will let you know why I decided to sell my Rivian stock and several reasons behind it. It's much more than just my Rivian and Tesla shares at this point. First, I have some fantastic, exciting news. Rivian Automotive and Volkswagen Group have today announced their intention to form an equally controlled and owned joint venture to create next-generation electrical architecture and best-in-class software technology. The partnership is anticipated to accelerate the development of software for Rivian and Volkswagen Group. It is expected to allow both companies to combine their complementary strengths and lower costs per vehicle by increasing scale and speeding up innovation globally. Rivian's proven in-market zonal hardware design and integrated technology platform are expected to serve as the foundation for future SDV development in the JV that will be applied to both companies' vehicles. Rivian plans to contribute its electrical architecture expertise and is expected to license existing intellectual property rights to the joint venture. Both companies aim to launch vehicles benefiting from the technology created within the joint venture in the second half of the decade. In the short term, the joint venture is expected to enable Volkswagen Group to utilize Rivian's existing electrical architecture and software platform. The partnership's ambition is to accelerate Volkswagen Group's SDV plans and transition to a pure zonal architecture. Each company will continue to separately operate their respective vehicle businesses. Oliver Bloom, CEO of Volkswagen Group, said, "Our customers benefit from the targeted partnership with Rivian to create a leading technology architecture. Through our cooperation, we will bring the best solutions to our vehicles faster and at a lower cost. We are also acting in the best interest of our strong brands, which will inspire with their iconic products." The partnership fits seamlessly with our existing software strategy, our products. We are strengthening our technology profile and our competitiveness. R.J. Scaringe, founder and CEO of the Rivian, said, "We're very excited to be partnering with Volkswagen Group. Since the earliest days of Rivian, we have been focused on developing high differentiated technology, and it's exciting that one of the world's largest and most respected automotive companies has recognized this." Not only is this partnership expected to bring our software and associated zonal architecture to an even broader market through Volkswagen Group's global reach, but this partnership also is expected to help secure our capital needs for substantial growth. Rivian was created to help the world to transition away from fossil fuels through compelling products and services, and this partnership is beautifully aligned with that mission. Underpinned by the vision of the strategic partnership, Volkswagen Group plans to make $5 billion investment into Rivian. Initially, Volkswagen Group will invest $1 billion in Rivian through an unsecured convertible note that will convert into Rivian's common stock subject to certain conditions upon the later of receipt of regulatory approvals and December 1st, 2024. Volkswagen Group is expected to invest a further $4 billion as part of the transaction too. There has been significant work done over the past months to validate that Rivian's electrical architecture and software are compatible with Volkswagen Group's vehicles. The parties currently expect the completion of the JV formation in the fourth quarter of 2024. Now, for my reason to be cautious in the stock market right now. The US 10 two-year Treasury yield curve has been inverted, two-year yields higher than 10-year for 23 months since July 2022. An inversion in this spread has preceded the onset of every recession in the last 50 years by an average of 10 months. Generally, longer than average inversion periods, 12 months February 2nd to December 28th, 2000, and 18 months June 8th, 2006 to March 20th, 2007, preceded deeper than average loss cycles for stocks and real estate. However, market participants have short attention spans, and the longer the inversion lasts, the more the consensus typically dismisses the indicator as no longer relevant. History says that's a mistake. The 10 3-month yield spread offers a similar heads up to the onset of recessions with an average lag of 15 months. This chart shows the spread between 10-year and 3-month Treasury yields. It is shifted forward by 15 months to help illustrate how GDP responds with that lag time. This yield spread first inverted on a monthly basis back in November 2022. Counting forward by 15 months takes us to February 2024, which was in the first quarter. We did not get a negative real GDP growth rate in Q1, but it did fall to a very low positive number. The full effect of the current inversion of the 10-year and 3-month rates has not yet been felt. Moreover, once Fed cutting cycles drop short rates, the curve starts to normalize or disinvert. But rate relief to the economy also takes a multi-quarter lag. Furthermore, that economic effect should continue to be felt for a period of 15 more months after 10-year 3-month spread finally disinverts. In other words, the FOMC members might believe that they are fighting current inflation right now by making current economic conditions tougher via their high interest rates, but in reality, the effect is delayed, and so the continuing inversion of the yield curve means poor GDP conditions for 15 more months after the moment when the yield curve disinverts. And we do not see any sign yet of any disinversion happening anytime soon. Canada inflation unexpectedly reaccelerates. May CPI plus 2.9% versus 2.6% expected. I think they cut rates too soon. I think inflation is very sticky. The biggest contributors were travel and rent. Travel is cyclical, so it's to be expected in spring months. There are two types of rent, in place and market rent. Someone might be paying $2,000 a month in rent, but the market rate is $2,500. As tenants move, landlords can increase the price to market rate. This is all a function of interest rates, which are still at historical highs. They are weakening the Canadian dollars. If more cuts are happening, as the Fed didn't cut rates, which will put pressure on Canadian dollars. We all know that right now the market is supported by NVIDIA AI stock story. They say it's different this time. Now there's artificial intelligence. Pay attention to this. Just like before the stock market crashed in 1929, right before that, all of Wall Street investors were focused on a small selection of stocks. First, it'll start with the NASDAQ. That's where it's going to begin when all the AI stocks drops. Then it'll spread out to more markets. Look at this chart. The volume, how much commitment is there with some of these moves. This is regular volume, and you can see here, this is a stampede. It jumped up here with a gap up before the trading volume suddenly picked up. This is the issue. This market has been driven higher by this activity. Now this activity needs to remain just as high. or else this market comes down. This was over the summer months when kids are out of school and all of a sudden everybody's trading stocks. It's a matter of how long can this activity level maintain. When there's no more stampede into a lot of these stocks, they're going to be coming down, in my opinion. Let's zoom in on 1 month. And you can see here, this is one last gasp. These are the latecomers who put it off for so long till now. They can't stand it anymore that the markets are going higher, but they didn't get involved. Now they've decided to jump in. That's who shows up last. You don't want to be those people because, in my opinion, that's when the market turns and goes against them. I think we are due for a correction in this market, so I will take my Rivian profit and run.